Ethereum just broke the 4K level, which is very bullish, and that previous resistance of 4K was broken in a very strong move with very big green candles, as you can see here on the chart. Now, the question that comes back to us is that gonna be a clean breakthrough or that's gonna be a deviation? Somebody in my Discord, we were just discussing actually that August, historically, in the bull run years, in the altcoin season time, have been always bullish months. If that's the trend now, August would be bullish and then we would see that as a clean breakthrough. However, then later on we would see again some kind of pullback to the previous support zone. But why this might not be true, I'll tell you in a couple of minutes. I would really stay away from confining myself with months or weeks. We always need to look at the bigger picture. Months or weeks could be very risky approach to follow. So then the other option is this to be a deviation, and that would be clear sign of trend exhaustion, and it would bring us back to the previous support zone 3K level, and then after that, if the trend continues, we'll go to the main support at 2K, which is very bearish. But let's imagine that we would follow the trend of August being bullish month and Ethereum would break above the 4K level. History rhymes, history repeats, that's true, but there have been very different conditions in the past. Now what we're seeing is a very different story. We have institutional adoption, we have less Bitcoin, let's say, in circulation, but let's discuss that next. Today I'm going to share with you a chart, and this chart I want to talk about the 4-year cycle and why history might not be 100% applicable anymore in the cycles moving forward. So if you're new to crypto, let me explain first what the 4-year cycle is. Every 4 years, Bitcoin's halving cuts the amount of new Bitcoin created for miners by half, which means we have less new Bitcoin, less supply on the market. And if demand stays the same or it goes up, then prices usually rise. And the typical patterns after the halving, which we can see on the chart shortly, you can see the halving event marked in orange over here, right? So we typically see slow rise before the halving, very slow rise, and then big rally in the year after. And price breaks through. Here you can see in the red zones, this is the all-time high of Bitcoin, and then crash in the bear market couple of months after the peak occurs. So let's have a look briefly at what we see historically. We would focus on 2016 and 2020, maybe 2012 as well, but we're not going to go further back in the years because it wouldn't be that realistic picture. Purely Bitcoin is rising along with this rainbow. The movement is parabolic up, steady growth, as you can see with the rainbow. And you can see the Bitcoin's price ranging to the lows and the upper band of this rainbow. And if we purely look at the bands, you see green and red bands. The red is indicating where the top occurs, and the green shade indicates the bear market. And in between, you can add, where it's good to start taking profits, where it's good to DCA and to buy. And you can see, for example, during the bear market, this is the perfect time when you should be buying. So if we check, let's say, timing wise, let's draw the date range to see from the halving event, let's say, to the top. That's around 460 days. Let's put it roughly like that. Then we would go to the next 2016 cycle. We have the halving, and then Bitcoin reached the top around 510 days after the halving. And if we continue, we'll now move here to the bottom. Let's move that across here. So you can see in 2020 we had the first stop 300 days after the halving, and then a second smaller but higher high we had later in the year at 500 days from the halving event. basically the trend is the first one. We will correct it because that's the middle here, but we've already printing, as you can see, lower highs over here. So let's mark it exactly at the top of Bitcoin, which is at the start of this red shade, not in the middle. So I'll just correct that. So it's 300 days, 360 days after the halving, exactly a year. Basically what we can say, the first year, 1 year after the halving event, Bitcoin peaked. In 2016, that was 500 days after the halving, year and a half, Bitcoin peaked. And in the previous cycle, we had two tops. One was 300 days, just a year after the halving, and then higher high later, year and a half. What we are seeing right now is, you can see Bitcoin's price is still nowhere up to the, already in that these green shades indicate the zones where you would be taking profits, and Bitcoin is high historically, and you can see it coincides with the highest candles, and it also coincides with this red shadow. Technically, right now is a time where we should be taking profits, but if you look at Bitcoin's price, it's not even there yet. That's why I want to explain we shouldn't be treating one-to-one alike all these different cycles. Yes, history repeats, but we shouldn't be confining ourselves with months or years. The expected top, let's say, should be 300 and days, 350, or between 360 to 500 days after the halving event. And if I want to know when exactly that would be, let's say 300 days or 400 days. So we are already in, as you can see, 300 days was here, then now we're currently at 455. And if we want to extend it to 500 days, so should be somewhere over here. And I've put so September, October, November. This is the time where we expect Bitcoin to reach its high. But to reach this zone here, it means we either need to see a huge, very huge spike, which is possible if we see, for example, interest rate cuts in September and Bitcoin reaches this zone very fast, or we would see an extended cycle into next year. Both cases are good, but that's why I'm saying we shouldn't be confining ourselves purely to historical performance, but also look at the current conditions. And why it wouldn't be fair to compare one-to-one exactly with the history is because right now we have big investors and ETFs are being bought regularly. Not just hype waves as in the past. Also, we have global economy factors like interest rate cuts, inflation. Those are affecting Bitcoin's price now more than ever. And also the smaller supply impact. Halving has less effect because Bitcoin's daily new supply is already tiny. And of course, we have more mature market with more traders, more derivatives, more regulations, much more compared to what it was before. We have also other sectors and other coins like DeFi, meme coins, and they can move independently of Bitcoin. The bottom line here, though, is the halving still matters, but the old, fully predictable 4-year boom and bust, cycle might be weaker or look slightly different this time. Either we can see, let's say, slower or longer bull runs, or shorter or unexpected corrections instead of the usual patterns. Just keep that in mind. History is always a good guide, but we shouldn't be looking at it in exactly the same manner. And also, we shouldn't be confining ourselves thinking that, we have just a day left, or we have just a week left, or we just have a month left. The only rule that matters in this space is buying low, buying cheap, and selling high, selling expensive. This is what you want to do, right? Catching the right moments. And use history as a guidance over there, but not restrict yourself to certain time limits or time frames or prices as well. So that's for me today. Thank you so much for watching. I'll see you in the next video.